What is going on, guys? Welcome back to the channel. My name is Tyler. In this video, we are going to be going over 14.5 billion divorce puts or FTD resets. This due diligence comes from Mac Attack 218 23 hours ago. It says divorce from reality part 2, married Monday, divorce Friday, due diligence. I love his due diligence pieces just because they are very thought out. They're kind of long, so you really have to, dive into this, which we're not going to get into the whole thing. I will link this down below in the description so all you guys can check it out, but we're going to mainly go over what divorce puts actually are, why this is significant for AMC, and this might ring a bell to some of the large players that we have been seeing, what they have been doing in the data that we see with AMC stock. As well as that, we're going to go over the fact that another Chinese property developer, they have now defaulted on their debt yet again, and this is very important because this is going to have a bleed over effect into the global markets, and the global markets is going to essentially be the stock market. So this is definitely going to be a negative thing. Not a lot of people are talking about this. The financial media not really talking about this. There's a lot of things going on, but eventually I think this will be the biggest focus of what is happening in China. It is going to cause a lot of fear. So we're going to be going over, compare this to Lehman Brothers and how long it took for Lehman Brothers once they started having financial troubles to when they actually did declare bankruptcy. Kind of try to give us a similar timeline to go off of when we are talking about today and what is happening with China. So let's not waste any time. Let's get into this video. And like I said, guys, this comes from Mac Attack 218, divorce from reality part 2, married Monday, divorce Friday, due diligence, updated 23 hours ago. I will link this down below in the description of this video if you guys want to check this out for yourself. Lots of numbers, lots of data. As you guys can see, it is a long piece, but you guys will get a lot of value out of it if you do want to take the time to go over it. Now, we'll go over the whole thing. We're going to just talk about what divorce puts are because it is very similar to what we are seeing happening with AMC in the overall marketplace. Now, what is a divorce put? In a divorce put, you need two parties. You need your OG shorter who has either short sold shares in a company that they need to cover or an outstanding failed to deliver position they need to close but don't want to buy legit shares to do so with. Secondly, you need a market maker who is also very likely short on the same stock, who is willing to bend the rules a little and help out the OG shorter. Sounds a lot like Citadel, right? That's the first thing that I thought. The OG shorter buys either deep in the money or deep out of the money put contracts equal to their short position from the market maker for a date far in the future. And that is exactly what we are seeing on the 13F filings because, as we do know, the SEC does not require these firms to publish the amount of shares they have sold short. They just don't legally have to, and usually they don't do that. But they do have to report the put positions that they do have, which we see very large put positions on AMC stock. Now, the market maker then naked shorts and sells the OG shorter shares equal to their short position. Again, you can't decide who you buy and sell to on the open market. However, using a combination of naked shorting during low volume times and dark pool abuse, you can be pretty confident of who the shares are going to if you coordinate. The OG shorter now has a short position, the equal amount of shares and put contracts worth the same amount of shares. The OG shorter then uses the shares given to close their short position, just leaving them with put contracts. The market maker also lets these naked shorts become fails to deliver. With the short interest has already been converted or the fails to deliver have been transferred into failed to delivers held by the other party. So just to sum this up for you guys, it's essentially using the option chain to hide the short interest, something we know is going on, but this is just more further proof that this is actually going on. And right here is all of the numbers you guys need to know. I will link this down below in the description so you guys can take a look at this. This would just be too long to go over in one video. A lot of people don't like breaking down the actual numbers as well. You guys can see how long this due diligence piece is, so definitely 100% check this out. You will come to 14.5 billion FTD resets. So a huge problem. Just talking about this helps further shine light to what is actually going on and the fraud that is taking place here. It is astonishing that they are able to get away with this. SEC should really wake up and do their jobs, but it will only be a matter of time before that does all come to light. Now, let's talk about this property developer that misses bond payment as stress spreads beyond Evergrande crisis. That is what this article does say. And key points. Ratings agencies have downgraded Chinese developers Fantasia Holdings and Cynic Holdings over risk from their strained cash flow situations. Fantasia Holdings did not repay a bond that matured on Monday, it said in a filing to the Hong Kong Exchange on Monday night. The real estate sector in China accounts for as much as 15% of the Asian's giant GDP, according to analyst estimates. And right down here, it says, on the heels of Evergrande's debt crisis, there are increasing signs of stress in China's property market after one developer failed to make a bond payment on Tuesday. Rating agencies have downgraded Chinese developers Fantasia Holdings and Cynic Holdings over risk from their strained cash flow situations. Fantasia did not repay the principal amount of $206 million of a bond that matured on Monday, it said in a filing to the Hong Kong Exchange. The firm has halted trading of its shares since September 9th until further notice, it said. Those shares have plummeted nearly 60% year to date. So this is not a good situation. Now, Evergrande contagion fears. The fallout from Fantasia, however, would be smaller compared with Evergrande. Evergrande is the world's most indebted property developer with liabilities of $300 billion, while Fantasia has total liabilities of 82.9 billion won, 12.8 billion, according to its first half financial statement. So not nearly as big as Evergrande, but it is very important to look back at history of what did actually happen with the Lehman Brothers situation, with just the American financial global crisis, because it was not just one thing that caused that. It was a bunch of different companies that were in financial trouble. Most banks were in a very bad situation at the time, with Lehman Brothers being really the topple over effect that did cause everything to come crumbling down. Now, if we take a look at this, Lehman stock fell sharply as the credit crisis erupted in August 2007 with the failure of two Bear Stearns hedge funds. During that month, the company eliminated 1,200 mortgage-related jobs and shut down its BNC unit. So August 2007 is when really all of this started to kick off. A lot of fears started to erupt, but only a year later, they actually filed for bankruptcy. Lehman Brothers filed for bankruptcy on September 15, 2008. Hundreds of employees, mostly dressed in business suits, left the bank's office one by one with boxes in their hands, in a somber reminder that nothing is forever, even in the richness of the financial and investment world. These guys were making a lot of money until everything ultimately came crumbling down. And at this time during history, the stock market did not recover for a very long time. Take a look at this. What actually did happen. We'll pull this out to the weekly chart and take a look back to 2008, really 2007, and what did happen. So right here, you guys can see top of the market 2007 back here in September, came crashing down. 2009 was the lowest moment, and then we did not fully recover until back here in 2013. Now, I don't think that's necessarily going to be the case this time around, because one, it is happening in China, but what happens in China, they are the second largest economy, will spill over into the American markets. And considering where we are at now, even at this inflection point where we have started to come down in the overall markets, we are not doing so hot. There's a lot of things, more so than just what is going on in China with their, property developers, but what is happening here with the debt ceiling, with everything from scandals at the Fed. Literally, a lot is going on. It looks to be like this could be a very bad time for the markets coming in the next couple of months. But what you guys need to know, these events take time. So if you're hedging for the downside, if you're planning on, playing a lot of this downside risk, I am personally waiting to see what does happen and what happens next. We could bounce a little bit, trade sideways, or just continue to slowly sell off, but it will likely take another year before we do hit the bottom, or at least in my opinion, in the next 3 to 6 months. History does not always repeat itself, but it usually does rhyme. And what happens in China will cause fear in America. And really what that comes down to is the markets, they go off of fear more than anything. Fear and greed. Over the last 18 months, we have arguably been very greedy, just hitting all-time high after all-time high due to all the money printing that has been going on in the economy. But when times are fearful, it doesn't matter what the numbers are really doing, what businesses are generating as far as profits. That fear takes over. People start to sell their investments. Trading algorithms start to sell their investments as well, bringing us down lower. I don't think, like I said, this is going to be a sharp crash like we did see in 2020, more so a meltdown effect until we do get something that does happen, either Evergrande bankruptcy, the Chinese government ultimately saying they're not going to bail the company out, or something along those lines. Now, we did just have another property developer that did say they are going to purchase a majority stake of Evergrande, but we don't have too much details on that. We're gonna have to wait and see what does happen. It does not look like the fear is going away anytime soon. So hopefully you guys got some value out of this video. If you do, drop that like on the video, as well as consider subscribing to the channel. Let me know down below in the comment section what you guys think about this information. Also, if you guys want to directly support the channel, links for public and the link for Webull to do that down below in the description, as well as the link for the buy and sell alerts. If you guys want to be notified every time a trade is bought or sold in real time, whether it's a day trade, swing trade, or long-term investment, check that out. Link down below in the description. We keep it very inexpensive, so anybody is financially able to join if they want to grow their knowledge with trading, long-term investing, and with crypto. So with all that being said, guys, stay tuned for follow-up videos later on today. You guys take care.